Hey everyone, in this video I'm going to review Unity Software's latest quarterly update, the big management chain at the top. I'm going to look at its revenue and the big disruption there, look at its guidance for the next quarter and the next year, and finally compare it with its valuation and its prospects for the next 5 years, and then update my buy recommendation for Unity Software. Coming into this quarterly update, I had rated Unity Software stock as a buy, so you're going to want to tune in to see if I'm changing that recommendation. So let's get into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so Unity Software saying they are pleased to welcome Matt Bromberg as Unity's Chief Executive Officer, effective May 15th. Matt brings over 20 years of experience in gaming, having served as the Chief Operating Officer at Zynga, where he played a key role in the company's turnaround. Now, this CEO change was a sudden, abrupt change, and it comes along a disappointing quarterly update for Unity Software. The company saying that revenue for the total company in the first quarter was $460 million, down over 8% year over year, driven primarily by our portfolio choices. They seem to have chosen to exit certain businesses abruptly out of nowhere, and that's a bit shocking to me that they would do this. Now, they've had some difficulty lately. Remember, they tried to implement a different pricing strategy that didn't go over well, and then they had to backpedal that. And then a couple of years ago, they had difficulty with their advertising solution. They went and made an acquisition to hopefully solve that problem. It doesn't look like that went well. So, a couple of errors here from Unity Software in terms of execution and not related to macroeconomic factors in the industry. This is execution, company specific choices, and not being able to execute effectively. So during the first quarter, revenue from their non-strategic portfolio was $34 million, down 59% year over year as a result of our portfolio reset, which included exiting non-strategic businesses. Now, that's a big downfall there. 59% decrease on a segment of the business that was pretty meaningful. And this is not what you like to see as an investor. Very often, management teams make choices about which industries, which products, which services to offer. And going into it, you expect them to have made this strategic analysis to determine whether or not this is going to be an effective decision. And you want to see more often than not, when they make those kinds of decisions, that it works out. You don't want to see them come back to you and report, you know what, it didn't work the way we thought, and so we're not doing that anymore. We're going to restructure, we're going to lay people off, we're going to change this, and we're going to do something different now because that thing that we said we were going to do that we thought was so great, that it was going to work so well, turns out wasn't so great. That's essentially what you're getting here from Unity, that they were targeting a certain segment of the market with a certain product, and it doesn't look like it's worthwhile anymore. And so they're saying, you know what, we're going to exit this category because it's not working for us. It doesn't have the long-term expectations that we thought, and so we're going to do something different. Well, you don't like to hear that because this is going to result in losses, and that's what I'll get to next. The GAAP net loss for the quarter was $291 million. The net loss includes a $212 million restructuring charge. So that's the cost of this restructuring, right? Making this decision to exit this business, it's going to cost you and they're saying $212 million. All right, because going into it, you made investments, you purchased assets, you hired personnel, and now to get out of it, it's going to cost you money because you're going to write down those assets. Those assets are not worth what you thought they were worth, and so now you need to get out of it, whether it means maybe having to pay so that you no longer have to pay a lease. Let's say you signed a 5-year lease on a building, and now because you're exiting this strategy, you no longer need that building. All right, but you signed a 5-year lease, so you've got to pay to get out of that. Okay. And then what if maybe you purchased some intellectual property? Let's say you paid $100 million for certain intellectual property that you thought was going to bring in a certain amount of revenue and profits over the next 5, 10, 20 years. Turns out that's not the case. So that $100 million intellectual property you purchased is now worth not as much. Maybe it's worth zero now because you're not doing anything with that. You're not participating in that business anymore. And then if you're cutting costs, if you're laying people off, you're paying people severance. Maybe you've agreed to a certain contract for some employees, and if you're going to end that contract early, you have to pay a termination fee. All of those costs add up, and Unity saying to the tune of $212 million. That's how much this restructuring is. And then to offset that, they had a $61 million gain when they purchased their convertible note and got that off of their book. So they paid that down. So that was something they strategically took advantage of in the quarter. So going forward for the second quarter, they're guiding revenue for their strategic portfolio to 420 to 425 million, which would be down 6 to 7% year over year. And then for the full year, they're confirming their guidance for the strategic portfolio of roughly 1.78 million, and that would be up roughly 3% at the midpoint, with adjusted EBITDA margins of 25% ending the year. So lots of big changes that were not good. Changes not on the good side here for Unity. Another misstep here from the company. Now the stock price already took a hit, and it's now trading at a forward price to earnings of 20.73. Cheap valuation considering that the analysts on Wall Street expect Unity to deliver 42% in earnings per share growth next year and 149% earnings per share growth per year over the next 5 years. Although the company has had a habit of missing expectations for 1, 2, 3, 4 quarters in a row, you could see here. Now, analyst price targets suggest it's worth $27.58, while it's currently trading at $21.67. Coming into the quarter, remember I had Unity stock rated as a buy. I last updated that on April 12th, but this was a complete, I don't want to say disaster, but it was a bad quarter from Unity. I didn't like what I saw from Unity at all. So I am downgrading Unity stock. I'm downgrading it one notch to a borderline buy, and I'm updating this recommendation on May 17th. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.